Have you ever felt confused, overwhelmed, or frustrated trying to figure out the best way to manage your healthcare expenses? Well, you're not alone. Plenty of women have had this experience, myself included, and it can be quite daunting to say the least. But health savings accounts and flexible spending accounts are two of the most powerful tools to help you manage your healthcare costs while saving you money on your taxes. Yet, they are among the most misunderstood and underutilized financial resources available, especially by professional and entrepreneurial women who are juggling multiple responsibilities. And so that's why today I am making things crystal clear. And so in this video, I'm going to eliminate the confusion around HSAs and FSAs by breaking them down step by step. And by the end of this video, you will clearly understand the difference, but also you will know exactly how to decide which one aligns perfectly with your personal, financial, and healthcare goals. And so real quick, if you are new to me or to the channel, hi, my name is Katrice, and I am a licensed health and life insurance broker, paralegal, and your wealth architect. And I help women entrepreneurs and professionals to grow, protect, and secure their finances and build a financial legacy that they can be proud of. All right, so let's jump into it. Now, I've touched on this topic in a prior video, but I wanted to go a little more in depth on the topic because as I've been having consultations with women about their health insurance, I am finding that they are either unaware or misinformed about health accounts. And if you have some knowledge of them, then maybe you have wondered which account actually saves me more money. Can I lose my money if I choose the wrong one? Or how do I even decide what's best for my unique financial situation? Okay. And even if you don't have a whole lot of knowledge of them, but you've heard about them, you may have been wondering, okay, what are they? What purpose do they serve? Okay. And so let me know in the comments if you have wondered about health savings accounts. Okay. But here's the truth. Making the right choice between an HSA and an FSA can significantly impact your financial well-being. And the wrong decision could leave you missing out on critical tax advantages, unnecessarily stressing about medical bills, or losing money that you've diligently saved. Okay? So let's start with health savings accounts, or HSAs for short. Now, these are one of the most powerful yet often misunderstood tools available for healthcare savings. So an HSA is essentially a tax advantage savings account specifically designed to help you cover qualified medical expenses. And so HSAs offer a triple tax benefit. Contributions are tax deductible, your earnings grow tax free, and withdrawals for qualified medical expenses are tax free. So you can think of it as your personal healthcare nest egg, allowing you to proactively manage your healthcare spending while saving significantly on taxes. And who doesn't love saving on taxes? Because I know I do. All right. Now, there are contribution limits to HSAs. And so for the tax year 2025, the IRS has set the limits for self-only coverage up to $4,300, and for family coverage it's up to $8,550. Now, if you are 55 and older, then you can add an additional $1,000 as a catch-up contribution. Okay, so now not everybody qualifies for a HSA, okay? And so You can open and contribute to an HSA if you are enrolled in a high deductible health plan. And so for 2025, that means that the plan has to have a minimum deductible of $1,600 for individual plans and $3,300 for family plans. The maximum out-of-pocket expense for the high deductible health plan has to be $8,300 for self-only coverage and $16,600 for family coverage. You cannot have any other health coverage besides your high deductible health plan. You cannot be enrolled in Medicare, and you cannot be claimed as a dependent on somebody else's tax return. Okay, and so if you check these boxes, then you qualify for HSA, and you can start reaping the benefits immediately. Okay. Now, if you are not enrolled in a high deductible health plan, you can enroll in one. Not being enrolled in one doesn't stop you from getting the high deductible, from getting the HSA. Okay. Now, why would you consider getting an HSA? Well, one, HSAs come with impressive advantages, particularly financially savvy women, for financially savvy women who are looking to optimize their financial strategy. So if you want to optimize your healthcare dollars more, then you're gonna you may want to consider HSA. Okay, so there's the triple tax benefits that you get. It's tax deductible contributions, and so the money that you put into your HSA every year reduces your taxable income, which saves you money each year at tax time. Your contributions are also tax-free, and so they grow tax-free, and so your contributions can be invested, and any earnings or growth within your HSA are completely tax-free. And then the tax-free withdrawals. And so when you use your HSA funds for qualified medical expenses, those withdrawals are also entirely tax-free, and so it's a win-win-win scenario. Okay. Now, the second reason is that your money rolls over every year, and so unlike FSAs, which we'll talk about in a minute, where you will typically lose unused money at the year's end, HSAs roll over indefinitely. Okay. And so this means that the money that you contribute stays yours forever, accumulating year after year, becoming a valuable asset for future healthcare needs or even retirement. Okay. Now the third reason is the investment potential. Okay. And so HSAs allows you to invest your savings much like a retirement account. And so over time, this can significantly increase your balance, helping you to build wealth while planning for future healthcare or retirement needs. And then the last thing is that they are portable and flexible. And so the HSA is yours, regardless of if you switch jobs, do career transitions, or entrepreneurship journeys. And so you're the one that controls the account, providing you with complete autonomy and flexibility. And I think for me, that was the best thing that I like about HSAs. Okay. And so now, if you are looking to get a HSA, or your interest is kind of piqued, some ideal scenarios for choosing an HSA would be you being relatively healthy and you are wanting to build long-term medical savings, or you're seeking additional ways to lower your taxable income. You're an entrepreneur or professional with fluctuating income and you want to strategically manage future healthcare costs, or you're focused on building long-term wealth. using the HSA as an additional investment vehicle for retirement planning. Okay, so let's take an example. So let's say Sarah, right? We're gonna just say Sarah. She's a 35-year-old entrepreneur, and she chooses to get an HSA because she's healthy, she wants to lower her taxes, and she sees the value of investing her healthcare dollars for the future. And so every year she contributes the maximum allowed, and she invests her contributions in diversified funds, building a tax-free medical nest egg that she can tap into anytime she has qualified healthcare expenses. Okay, and this is really good for moms, because as a mom, we with our kids can just get sick at the drop of a dime. They can fall out of a tree, break an arm, break a leg, and so the medical bills can get quite high. And so, having that health savings account, having that nest egg, it relieves some of the strain, some of the pressure off of your bank account when it comes to your medical expenses, right? And even when it comes to purchasing certain things, certain medications or over-the-counter things, a lot of stuff you can purchase with your HSA dollars, right? And so that's less money coming out of your household funds, because you've already allotted this money for medical purchases. Okay, and so a quick recap of HSAs. They are triple tax advantage on the growth, the contributions, and the withdrawals. There's no use it or lose it rules like with FSAs, which we're going to get into. And the funds, they roll over year after year. There is the investment option for long-term growth, and they are portable and flexible, which makes them ideal for entrepreneurs and professionals. Okay, and so now that I've demystified HSAs, let's take a look at FSAs next. Okay, and so now FSAs are flexible spending accounts, and they are highly beneficial but often overlooked financial tool designed to help you strategically manage your healthcare costs while lowering your taxable income. Okay, and so FSAs are a special employer-sponsored account that allows you to set aside pre-tax money specifically for qualified healthcare expenses within any given year. Okay, and so you can think of FSAs as an immediate access healthcare savings account designed for predictable medical expenses, from doctor visits and prescriptions to dental care and vision costs. Okay, now unlike HSAs, FSAs aren't tied to having a high deductible health plan. Okay, and so to qualify for one, they are employer sponsored, and so they must be provided through your employer. And self-employed individuals or entrepreneurs typically cannot open a FSA unless it is structured through a corporation. So if you have your business structured as a corporation, then you can open a FSA, because technically your corporation is the employer and they can sponsor the FSA. Okay, or it can sponsor the FSA. Okay, now there is no specific health plan requirement, so you don't need a high deductible health plan to qualify for a FSA, and any eligible employee at a participating employer can open one. Okay, now the key benefits of a FSA is the immediate tax savings, and so any contributions made pre-tax, so coming off your gross income. So this immediately reduces your taxable income, which translates into instant savings on your taxes each paycheck. It's your full annual contribution amount is available on the first day of the plan year, even though contributions are deducted incrementally from your paychecks throughout the year. Now, this can be incredibly helpful if you have immediate medical expenses early in the year. And then FSAs can be used for expenses like co-pays, deductibles, dental procedures, eyeglasses, contact lenses, prescriptions, and even certain over-the-counter medications and medical supplies. Okay, anything that is considered a qualified medical expense, you can use FSA dollars for. Okay. Now, there are some important drawbacks that you do want to consider. Okay, there's the use it or lose it policy, which means that you are required to spend the funds within the calendar year or plan year. Okay, and any unspent money is often forfeited, although some employers will either offer a grace period of up to 2.5 months into the new year or a limited rollover into the following year. And so for 2025, that rollover can be up to $610. Okay. Now, for 2025, you can contribute up to $3,200 per employee, and so this is lower than the HSA limits, and it does not allow for investment or long-term accumulation. Okay. Also, FSAs are employer specific, and so if you change jobs or leave employment, unused funds generally remain with your previous employer, unlike a HSA, which you fully own. Okay. And so a FSA may be ideal for you if you, if you are working on a job, if you have an employer where, you foresee yourself being with them long term. Okay. And so for my ladies that are climbing the corporate ladder, FSA may be a good option for you. Okay. Also, if you have predictable recurring healthcare expenses each year, you may consider one. If you know that you'll need the funds up front for treatments, prescriptions, or planned medical procedures, and if you want the immediate tax benefits without committing to a high deductible health plan. Okay. And so let's take a look at another example. So this time we're going to look at Vanessa. Okay. And so she's a successful entrepreneur, and she has a predictable annual healthcare costs, regular vision exams, dental cleanings, and prescriptions. And so she has, her business structure is a corporation, and so she opts to set up a FSA through her corporation. Okay, and so she contributes the maximum of $3,200, and so right away she has access to the full amount on January 1st, covering her annual dental, vision expenses up front, while this also is reducing her taxable income, which saves her hundreds of dollars each year in taxes. Okay. And so if and so if you are an entrepreneur and you have your business structured as a corporation, then you may choose to set up the FSA, because technically the corporation, which is yours, would own the FSA, so it still would be yours. Okay. So you still would have a little more control over it versus if you were in the corporate space and you had an FSA, my bad, then you wouldn't have so much control. Okay, if that makes sense. All right, so just a quick recap of the FSAs. You get the immediate pre-tax savings on a predictable medical expenses. It's pre-funded upfront access. The use it or lose it funds with limited rollover and grace options. And it is the employer dependent, generally not portable between jobs. Okay. All right. And so now that we have clarified FSAs, let's let's talk about side-by-side comparisons. Okay. So I have a free resource that you can get that does a side-by-side comparison of FSAs and HSAs. Okay. Because you want to be able to compare and see how they align with each other. Because the truth is, choosing the right account is not about which one is better. It's about which one is better for you. Okay. And so if you want to get your hands on the free comparison chart that can help you decide which one is better for you, then you can click the link. I have a link in the description of this video where you can get the free chart. Okay. All right. So now I'm going to walk you through how to apply this information to your personal situation. Okay. So get a piece of paper and something to write with and jot down these questions so that you can, to help you to figure out and become clear on your needs. Okay. So the first question, how predictable are my medical expenses? Okay. So if you know you're going to be going to the doctor regularly, take medication, or you have kids with braces and checkups, then you write all that stuff down because those are recurring expenses. Okay. But then if you rarely visit the doctor and you want to build wealth while saving for the future health costs or retirement, right? So figure out which category you fall in. Okay. Now the next question is, are you looking for short-term savings or long-term growth? Okay. So a FSA will give you instant tax relief, which is perfect if you need that support during this year. Okay. HSAs, they grow with you and they are more of a long-term strategy, helping you to build an emergency health fund that never expires and even acts like can act like a second retirement account. Okay. Now number 3, am I self-employed or do I change jobs often, or am I going to stay with this particular company I'm with for quite a few years? Okay. Now, this is FSAs are employer tied. So if you leave your job, you're going to lose those funds. HSAs are yours. So no matter where you go or what you do, the money is always yours. And then the next one, do I have a high deductible health plan? Okay. Now this one is very important because you cannot open an HSA unless your health insurance qualifies. And if you currently don't have a high deductible health plan, it's easy to enroll in one. Even outside of open enrollment, as long as you have a qualifying life event. Okay. So say you decide to leave your job and go full-time into entrepreneurship, so that means you no longer have health insurance. Okay. So that would give you a qualifying life event, and then you would be able to open a high deductible health plan and then subsequently open an HSA. Okay. And then the last question is, do I want to invest and grow my healthcare dollars? And so if you want to be financially strategic and you want to make your money work for you, then HSAs are unmatched because its tax-free growth and investment opportunities are very unique to them. Okay. And so now, whether you are running a business, climbing the corporate ladder, raising a family, or managing both, the key here is alignment. Okay. The financial tools that you use, that you choose, should match the pace and priorities of your life and not complicate them. Okay. And a lot of times a lot of the financial advice that is given is designed more so around men. It is not designed around the unique lifestyle and challenges that women go through. Okay. And so when you are looking at not just your health care, but any type of financial tool, then it needs to be something, one, that matches. It will help you to maximize your dollars. Okay. It needs to be something that you truly understand, and not something that is complicated and you're going to get into it and then you're like, oh my gosh, I don't even know how to use this. I don't know what's going on. I'm so confused. Okay. And so if you're looking for flexibility, freedom, and long-term strategy, then the HSA is a powerful tool. Now, if you want short-term structure and tax savings throughout the year, then the FSA is simple and effective. Okay. So don't guess or gamble with your money. Okay. Choose from a place of confidence and clarity. Okay. And this is why I share the information that I share on this channel, because women need to understand exactly how these tools work and how to make sure that they are maximizing their dollars, but also protecting, growing, and securing their money. Okay. Because at the end of the day, and even if you're married, whether you're married, single, in a relationship, none of that matters, right? When it comes to your money, you need to be the one that is in control of it and understand it. Okay. I always caution on the side of allowing somebody else to manage your money and you not knowing what's going on, because this is how women get blindsided and left up the creek without a paddle. Okay. All right. So let's recap. So now you understand the key differences between HSAs and FSAs. Okay. And so we've looked at the pros, the cons, and how they each could match your lifestyle just depending upon what you have going on. Okay. But most importantly, I've helped you to start thinking strategically, not just about trying to save money on healthcare expenses, but about building financial alignment and security within your life. Okay. This information, this video was not just about health care accounts. It was more so about helping you to make empowered decisions. Okay. About designing a financial system that works with you and not against you, about making your money feel like a source of peace and security and not pressure. Okay. And so I hope that is what you received from it, because that was the intention of this video. Okay. All right. And so if you have made it this far, thank you so much for watching. I so appreciate you. My goal is to always provide practical, actionable financial advice to help you to take control of your finances and your future. And so if you would like to book a consultation with me to discuss your insurance, retirement, or estate planning needs, then you can book a free consultation with me, and you can do so using the link in the description of this video. All right. Now drop a comment below and let me know. Are you team HSA or team FSA? Or are you still deciding? Okay. Don't forget, I have a free resource for comparison chart that you can get. The link will be in the description of this video. Okay. Now, if this video helped you out, gave you some information to think about, or educated you on the two plans, the two types of health savings accounts, then give it a thumbs up and share it with your business bestie who could also use this info, and also subscribe if you like the content I provide on this channel, because we don't just talk insurance here, we build financial wholeness. Okay. Alrighty, and so remember, the way to secure your financial future is to protect it now, because no one is coming to save you tomorrow. All right, have a good one.